Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Forex Quick Look. I'm going to take a look at the dollar versus Canada. We've seen a couple of big days to the upside, starting yesterday with a big move to higher, and then a further move to the upside and trading here today after a little bit correction overnight. The move to the upside yesterday, we moved back up to the moved up to the 38.2% retracement of the move down from this high. This is the May high to the low price that we saw in the month of July. 38.2 came in at 133.06, and that's precisely where the price high came in yesterday. Also, we came up to this swing area. This swing area is defined by a number of different swing lows and swing highs going back in time, outlining some of them here, 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 here. Admittedly, it's not the cleanest of levels. We've had moves above and below it, here, here, and here, for instance. But most of the time, the price has been able to either use that level as a level to buy against or a level to sell on a breakthrough. So getting above that area was more important. So what I'm trying to say is that this area between around the 38.2% retracement is now a key support area for this pair. The bias tilts more to the upside in the short term. Stay above the 38.2% at the near the 133 level. That's a nice round number to find support. As long as the price can remain above that level, the bias remains to the upside. On the top side, we have the with the 100-day moving average. That's this blue line right here, and the 50% retracement at 133.72. So 133.72.9, 134.07 as the next targets on the daily chart. That's how I see the dollar versus Canada from that perspective. Now let's take a look at the hourly chart. And what we see on the hourly chart over the last 2 days is really little in the way of corrective price action apart from this move to the downside late yesterday and into the Asian session. That corrective move to the downside got nowhere near the 38.2% retracement of its move to the upside, and we saw the market rotate back to the upside. So little in the way of corrective moves. That brings me to the 5-minute chart. And if we take a look at the 5-minute chart and look at it, we see how this move to the upside yesterday got above moving averages here. The 200-hour and 100-hour moving average trended. When we started to move below the 100-bar moving average on the 5-minute chart, we started to see more corrective action to the downside. And then the market consolidated this move. And when we moved back above the 100 and 200-hour moving averages here, what did the price action do? Well, over here, we saw the price test the 100-hour moving average on the corrective move. We saw it tested here. We saw it tested here and then move away. So guess what? This 100-bar moving average has held support on 3 separate occasions in trading here today. And if the price is going to go lower, we need to get back below that level around the 133.20 level. And then we know the 133 level off the hourly chart is a key support at a level as well. So that would be the targets on the downside. By the way, the 200-bar moving average is at 133.05, near that 133 level. So getting below these short-term moving averages, getting below the 133 level on the hourly chart are all clues that the bullish run to the upside is over. And sometimes you got to do it that way, folks. As long as the buyers remain in control, they're in control. So there you have it. A look at the dollar versus Canada from a lot of perspectives. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.